A real good chart pattern is what's called a cup with a handle. And the reason I say it's really good, or one thing I like about it, I guess, is it's combining different types of items. It's combining pricing patterns and trend lines and volume levels and moving averages kind of together into one chart, and you're looking for this pattern. And the pattern looks like a cup. And so let's take a look at that and why this makes sense and walk through the idea of why it forms a cup and how we can take advantage of it as investors and as traders. Okay, so here's our cup with a handle here. So bear with me a second, there's a lot going on here. So let's walk through it here slowly so you can kind of see all these different moving parts here, because it combines several different things in one chart. So if we first look at the line chart, you can see that in this particular example, there was a steady rise here in pricing going left to the right. And then there was a kind of this indentation, which is kind of the cup part, and where prices reached a peak, they fell, they stayed low for a period, and then they rose back up again to another peak, and then they leveled off, and then they rose again. So you see our line where we go up to a peak, we bottom out, stay bottom, rise back up, flatten out, and then go back up to a rising pattern. So you can see the cup and the handle here in our chart. I put some little extra things in there to make it easier to see. You can see where it looks like a cup, right? The inside where you put your liquid, and then there's a handle at the top here, and you want the handle to not be downward facing. You want it to be, parallel or maybe a little bit more, upward facing as far as this rising trend type pattern. And the thing with any of these types of charts, you're not going to see something that's going to look exactly like this. And this is pretty clean looking as far as a definite showing cup and handle. You might have to kind of, interpret a little bit more when you're looking at an actual chart. But what's going on here is prices have risen. You can see my yellow simple moving average, right? Remember our moving average lesson? If you haven't looked at that, do look at that again. But you can see how my prices are above the moving average at the start here, and that's a good thing. And so that's good. It stayed above the moving average. It then leveled off and came back down to it peaked and then came back down to my moving average, where we have a period where the pricing is going above and below the moving average as the market sorts itself out. It rises back up again to the right-hand side peak of the cup, where the market has decided we're going to go move forward. Some people get scared and sell out, so it flattens out at the handle, and then it goes back to that rising pattern again. So that's the kind of the thought process behind it. Is it's rising, people get a little scared or say, no, I need to take profits or sell, forms a cup, gets back up, levels out again to kind of shake the last people out who weren't so sure, didn't sell the first time, and then goes on the rising pattern. And we're overlaying our simple moving average to see how that forms at the bottom of the cup. And then everything you can see in this example is still, on the left and the right hand side are above the moving average. The other part that's very important on the cup and handle is trading volume. You can see where we have our normal trading volume on the left hand side when prices are rising. And then when we form the cup, what you want to see is lower trading volume. Basically, people kind of shaking out of the market, but not everybody or not a lot of people, because then you would really have a downward trend. Really all you have is a period where people are shaking out of the market, and you have this low volume trading, and then the volume trades up higher as people get in and say, boy, this might be a buying opportunity because the prices have come off their peak. And that's where the handle forms, and then after the handle, we're back to a rising pattern. So it's an interesting pattern, what I really like, because it's overlaying a lot of different stuff. And once again, I won't look exactly, but I've got rising prices, I've got a falling low volume period where it's shaking out some prices, followed by a rising period. Then it shakes out the last people on the handle who want to sell off at that peak, what they perceive as the peak, and we're back to a rising pattern. So you can see you want to buy, probably towards that handle, or certainly at the end of the handle when it breaks out of the pattern at the handle and starts forming into and now a rising pattern. If it was to go back down again, then there's something else maybe going on. It's not a true cup and handle, because you need to let that pattern emerge, to establish the new pattern. But once it does that can typically this is what it'll be. But you're overlaying all these pieces: your prices in line, looking for the cup and handle, looking at your moving averages, and then looking at trading volume. And if there's something extraordinary doesn't happen, this is the idea of how the pattern will typically follow.